From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Well, what a Wednesday we had. We actually started out pretty positively, but then we started to see some selling momentum filter through in the afternoon trade. So we're closing, I think, fairly flat there on the CIBO 200. The ASX 200 is actually down 11 points or 0.1%. Star, once again, one of the laggards today, but certainly a bit of a wobble in afternoon trade, a bout of afternoon selling, really sort of offsetting some of the earlier gains that we saw, particularly in those property players. So just getting along to the, I guess, seesaw slide that we saw in markets, and a lot of the weakness as well coming through from tech players today. Just having a look at where the IT sector is sitting towards the end of the trade, down by 1%, but so is Telco, so are industrials. So really there's only a few sectors moving higher as we finish out the day's trade. And then of course, the other reason for a little bit of caution and a bit of selling is that we are awaiting this key inflation print coming through out of the US tonight. Let's have a quick look at what we've seen in some of those sectoral moves. I mentioned some weakness in tech today. WiseTech Global down more than 3%. Zip off by 2.2%. The REITs also took a hit, although Charter Hall is up by 0.8%. Goodman Group was one of the stocks of the day on the call today. And then just having a quick look at healthcare stocks, which were down by 0.7%, and my mistake, REITs were actually higher by 1/3%, but healthcare did come under pressure today by 0.75%, CSL off by around 1%. Quick look at some of the stories. Telstra in focus. It was the stock of the day on the call. It will spend $700 million over the next 7 years deploying artificial intelligence. Shares down 1%, and it was a double sell from my panel, Michael Gable and Gary Glover. We also had AV Jennings, potentially the subject of a bidding war. Singapore listed developer and investor COB Land launching a $391 million takeover proposal, topping an existing offer for the home builder. Arafura Resources had a very solid session after securing $200 million in funding from the government's National Reconstruction Fund. Baby Bunting also did well, reporting a jump of 37% in net profit for the year, and more importantly, reaffirming its earnings guidance. And Ingenia, just a little bit weaker. Adjusted earnings now in the $162 to $165 million range. That'd be a 20 to 23% growth from full year 24. Let's welcome to the COB Julia Lee from FTSE Russell. Good to see you in the studio, Jules. Happy New Year.
To be here. Happy New Year.
So how did you see today's market action? I saw you coming going, look, how did we end up in the red?
Yeah, it was a bit of a whiplash market. On one side, we saw, the materials doing well again. It was great to see iron ore prices making that fresh 2-week high, but importantly above 100 US a tonne once again. And we did see some numbers out of China just for 2024 showing that iron ore imports were at another record high last year. So that was great to see, and that's been quite supportive of prices. And the banks also doing well as the Aussie dollar very slowly recovers. But I guess the miners very much in focus. I mean, you mentioned Arafura with the National Reconstruction Fund, but also in terms of WA funding, we saw a couple of miners also benefiting there. So Pilbara Minerals there receiving some benefit. I think there was funding for 3 projects in WA there that was announced. So that was great to see. But all in all, the countdown's now on for reporting season, so half-year earnings reports. So we are in the midst of confession season. So nice to see some good commentary coming through from the likes of Baby Bunting today, and just watching those positive confessions as well as potentially some negative ones.
And some of the negative ones we got from Myer and Premier Investments on Monday, very much seeing those stocks sold off. It does look like the merge will go ahead with the brand apparels business. What's your view on the retailers?
Yeah, I mean, the Myer Premier vote will be next week. So, but one step closer with that independent valuation being a positive there. But altogether, I think the retailing space, we've seen some positive updates coming through from the likes of Baby Bunting and City Chic now this week. But on the flip side, we know that retailers will probably be coming under pressure. It's pretty tough out there. The high interest rates, inflation still biting, the costs of things really biting into consumers' wallets. And yesterday we got a signal of that, with consumer sentiment down for the second consecutive month, so down by 0.7% in January. And then add into the mix, of course, that lower Aussie dollar, which has really been biting over the last 6 months. So most retailers are importers of goods, so those retailers like Harvey Norman, JB Hi-Fi, I think this half-year reporting season is going to be one to watch, because reporting season is not as much about the results that have already happened,
but the guidance
and the outlook. So that Aussie dollar, I think, is going to be a key theme that runs through this reporting season.
And a lot of people talking about the sectoral reversal as well, from the banks perhaps back into the miners. What about when you look at companies that might benefit from the environment we're in? And as much as it's devastating to see what's happening in California, it's the likes of James Hardie, Johns Lyng Group, those sorts of companies.
Yeah, I mean, building construction is one area, and I think we mentioned the Aussie dollar, and I guess some of the companies that are doing it tough because of the Aussie dollar. But on the flip side, when we look at beneficiaries of the Aussie dollar, I know that a lot of people are still travelling at the moment with school holidays on, and it's tough travelling internationally with that very low Aussie dollar. But on the flip side, inbound travel into Australia would be a beneficiary. So you're looking at companies like Webjet, Flight Centre, Qantas, all potentially benefiting from that weaker Aussie dollar. But also looking at those US dollar earners, and we will see, some of those US dollar earners being the ones that are the first to report because they report quarterly earnings. So we'll be seeing the likes of CSL, ResMed coming through with their earnings reports, Brambles coming through, and that lower Aussie dollar obviously going to hopefully translate into higher dividends for shareholders there.
What should we be looking out for US reporting season 2? Again, that forward guidance, I bet.
Yeah, I mean, US reporting season really kicks off tonight with the banks reporting earnings, so we'll be watching that very closely. But I think the key for reporting season at the moment is that valuations are historically high. I mean, if we have a look here in Australia, multiples are around 17 times. And when you see valuations that stretch, what you really wanted to see is fundamentals kicking into gear and that earnings growth coming through to support that higher valuation and the outlook for higher growth. But unfortunately, you're not seeing that with Aussie shares at the moment. In fact, if you have a look at sort of consensus, earnings growth is still expected to go backwards around about 2%. That's better than where it was, 4 to 6 weeks ago, but still, you're seeing contraction in terms of earnings expectations. And that's why this reporting season, I think, is critical for Australian companies, because you are seeing those higher multiples out there, and you're seeing, the 10-year yields out there pretty close to 5%. So you're guaranteed a performance of 5% in terms of looking at fixed income, and that's really a pretty tough environment for equities. So I think US equities still expecting to see the tech sector as well as the communication sector continuing to perform in terms of earnings growth, but the Aussie share market, I think you really have to watch that earnings outlook for...
Yeah, Marcus Padley made a good point to Andrew earlier. Don't forget that we can look beyond our own front door and, invest in the US as well. Speaking of CPI in focus tonight, what does that mean for us, particularly when you're talking about those bond yields?
Yeah, I mean, so much is happening in the bond market at the moment. I mean, you look at the US, and we've seen the US cutting interest rates since September, and the 10-year yields have continued to rise. And that's on the back of some stronger data coming out of the US. I mean, their December employment numbers just knocked it out of the park. And on the back of that, you saw stocks coming down and you saw bond yields rising. So these CPI numbers are going to be critical for that interest rate outlook as well. So watching inflation, I think a bit of jitters creeping into our local market towards the end of the session, given that the report does come out tonight. But also together with that, we're going to see Trump taking the presidency, and I guess a bit of nerves there that could be inflationary as well. So there's lots happening in terms of the bond market, which of course in turn impacts us on the equity market. And of course here domestically, the big day will be Thursday, where we'll see our own job numbers coming out for December. And the jobs market has been on fire in Australia. I mean, July to November, we saw more than 200,000 jobs being added.
Wow.
So it wouldn't be a surprise to see, I guess jobs being taken away in the month of December, given those very strong numbers that we've seen. But the key for investors is whether we start to see a reversal in that trend or a continued very strong jobs market, which would be an indicator of underlying growth and strength in the Australian economy.
So making February very, very live, the RBA decision.
Yeah, February will be a very interesting one. Of course, Those job numbers are going to be central for that, but we've seen a number of big banks now changing their view in terms of February. It would be nice for Australian investors. You know, the other thing is that the Aussie dollar is doing a lot of the job as well. So that weaker Australian dollar really helping to balance some of that weakness that might be coming through in the economy.
All right, Julia, always great to get your insights. Thank you so much.
Thanks, Julia.
Julia Lee there from FTSE Russell. Well, the stock of the day today was Telstra. I was joined by Michael Gable from Fairmont Equities and Gary Glover from Novus Capital.
Spent most of the last 4 years around this level. So as you can appreciate, Telstra share price, we don't expect much movement from here. Clearly it's at a bit of a resistance line at the moment, which means if it gets above that, it might have a bit of a run up towards 440. So there could be several percent upside in the share price, but yeah, look, not really going anywhere. So I think Telstra is obviously one of those stocks that people buy for the dividend. Look, it's got a 5% dividend, you get 5% in the bank, so all you're really gaining is some franking credits.
Yeah, look, I think we're going to see a lot of firms there spend a bit of money here on AI. So, but those sort of improvements to earnings there. I mean, that's a 7-year layout there for that. So that's in terms of the cost save. Obviously, they're spending money to sort of save money here, but it's not going to move the needle quickly. It's going to be a long-term thing. So I just think you're going to see lots of firms do the same. I agree with Michael there. I think it's not too much to get excited about the stock here.
All right, let's take a look at the leaders on a day when we have finished pretty flat into the red. Liontown, they're looking good. So we really did see an upside in some of these minerals players. Pilbara as well, up by 5%. Guzman y Gomez helped out by a broker upgrade today. Nickel Industries and IDP Education also looking good. To the downside today, Neuron Pharmaceuticals fell by 8%. Star Entertainment, which had 2 days of good buying on a so-called mystery buyer from Macau, today under pressure, down 7%. Hub 24 off by 3.4%. Johns Lyng also lower, and we mentioned the switch out of tech today as well. In the small end of town, Arafura Rare Earths, we mentioned the reason why it was rising. That was because it's going to get $200 million from the government's National Reconstruction Fund to support a new mine and processing facility. Titanic also good. Baby Bunting doing well on a trading update. Vanadium and Live Verdure were also strong today. On the flip side, we saw Nova Minerals, Highfield Resources, Brockman Mining and Watso Property coming under pressure. Of course, tonight it is all about the CPI print for December in the US, and we'll also get a broader read on the overall economy with the US Fed Beige Book too. Let's have a look at what we're expecting tomorrow. It is the labour force December data. Julia Lee just telling us how critical, pivotal that is for the the RBA's February meeting. CBA still thinking there'll be a February cut. We had Stephen Halmarick on earlier on AusBiz. Westpac, meanwhile, think it'll be later in the year. We also had Westpac's Jamison Coombs on today. A final look at where the market is tracking, and pretty flat there on the overall CBO 200. Just getting a read on the ASX 200, which was a touch lower, I think. Actually falling a bit more on the close, down 17.7 points or 0.2%. 8,213 is where we sit there. And of course, don't forget our first investor event for 2025 happening this month, January 30th. Time to get it in your diary. High Conviction is a selection of the best ideas for this year across public and private markets. We'll have some of the country's top investors with their high conviction concepts, whether they be themes, strategies or individual stocks. Registration is free. You can get all the details, ausbiz.co/conviction. All right, that does it for this Wednesday. A bit of a whiplash Wednesday as it was in the end. We'll be back with all the inflation data and market action from Wall Street, and of course what to expect on our market tomorrow from 9:45 a.m. Eastern. We'll see you then.